The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, boys and girls. Anyway, we are starting the week off, March the 9th. Very, very important day. Those of you that were around here 6 years ago, you were being ready to sell just about everything you had for about 3 cents on the dollar as the Dow was trading at 64.64, which was a 61% retracement off of the low from 1987, as I recall. Yes, it was. And that was a really big Astro date. That was a big Bradley date. And of course, we have had the fourth largest bull market of all time. I remember it very vividly because I mentioned that I thought it would be the greatest short covering rally that would ever ensue. And it certainly broke every record there by any chance. It just really was basically been a big run. The first chart that I posted in here was the chart showing the quantitative easing effect on what stocks have been doing. Whether that is actually what's going on, I don't know exactly, but it certainly helps describe, why prices have gone to where they are. We've had a lot of buybacks, and more of those are occurring as we go through each day. So we want to just remember. I had a very, very interesting call about a half hour before the show started. One of the reasons I do this with Tom O'Brien, two reasons. One is I really like Tom O'Brien as a person and the things he tries to do. But the second reason is the fact that the quality of the people at TFNN and the people that call in and contribute are really very, very helpful to me from a lot of different areas, because I have some public exposure and I need to be well versed on a few different things. So I get a lot of different information from people to try to simulate it with the patterns that I look at. But one of our den folks that we know quite well, I won't mention his name right now, but we will talk about it later because next week is the time we want to look at this. As most of you know, Apple's been included into the Dow Jones Industrial Average. Now, Apple doesn't have any control over that. That's the Dow Jones Industrial Company, Dow Jones Publishing. They're the folks that do this. It's one of the worst run businesses on Wall Street from what I've heard, but I don't know anything about that. I'm just passing on information. They've been around for a very, very long time, the Dow Jones, 100 and some years. But it's just an index is what it is. It's not an exchange. NASDAQ is where the Apple is traded. And it's also traded at the New York Stock Exchange, I believe, also. But I'm not even sure of that because of the way these different exchanges operate. But it's also listed in the S&P 500, which is also an index. So these are things that you want to remember, that the Dow Jones is basically, I think there's only 2 stocks left from 1929. That's as I recall. I know General Electric is still in there, and there might be one other one. Well, anyway, the Dow Jones is going to be taking out, I believe it's DuPont. Yeah, I think it is DuPont. Yeah, it is DuPont de Nemours. It's those are the 2 that were left. Those of you that might not remember or read about this, there's a book called Only Yesterday that is really fabulous. It goes through the history of this, what happened during the 20s and 30s. But during the 1929 through 1932 period, 16 of the Dow stocks went bankrupt and were no longer around. And remember, this was the time when we had some of the greatest innovations that history had ever seen, i.e. the telephone, i.e. electricity. I won't even talk about indoor toilets or indoor toilets. I didn't have one of those till I was a junior in high school. So these were big things, and the automobile. That's and these you're talking about some real serious stuff here: telephones, electricity, And automobiles, I can remember the Iceman, how we used to chase the ice truck down the street because they would bring ice into the house and put it in the top of the refrigerator, and it would last for 4 or 5 days, and the Iceman would come and the milkman would come every other day. Well, you know, those are days long since gone. Unfortunately, that's the past. We don't have to live there, but that's just some of the things I remember. Now, on March 19th is when the Apple is going to be included into the Dow. It knocks out AT&T. By the way, AT&T went bankrupt twice. Once, I believe, right during the Depression, and once during the rally of 1938 or 39. It had some really big problems. I remember that reading it in that book only yesterday. But also on 19th of March is the the stock of Visa is going to split, and that's I believe the most expensive stock in the Dow. And so that'll have some effect too. So the Dow will be influenced by quite a bit. Now that we don't have to worry, you know, too much about that. So that's neither here nor there. I have to tell you a little bit of history. Oh, by the way, we're going to have Todd Gordon as our guest at the half hour. Todd is a very, very experienced young man that has been on CNBC. He's a regular contributor there. You see him on the tube all the time. He tries to be, you know, a Larry Pesavento look-alike, but he frankly just he's got the youth, but he just doesn't have the looks. What can I say? Anyway, he'll be on at the half hour, but he's very, very good implementing Elliott Wave along with patterns and support and resistance, and he does a great job educating folks. So we'll put him on. He happens to be a big fan of Tom O'Brien also, so we'll have him on at the half hour, and we'll see what he has to say. The next chart that I wanted to talk about is what the real market has been doing. We've been talking about this for so long that it seems a little bit repetitious, but you got to keep in mind that not many people talk about this. And this is the Dow Jones, it's the New York Stock Exchange Index going back for the last 9 months. And as you can see, we've been in a trading range basically for the last 9 months. If you'd have bought a basket of stocks, not counting the NASDAQ, of course, you know, you're basically unchanged to down a little bit in the stock market, because we are actually lower now at 10,850 than we were back in July when we were making the high at 11,150. So we're actually down from where we were when the actual stock market made a high. Now, it made a high in July, it made a high in August, a little bit higher high by a tick or two, a little bit lower high in November, and a slightly higher high here again on February. But we had a gap down on Friday with this big down day. And if you look at this chart, you'll see the only other time we had a big gap down like this was way back in July of last year. We went down for another week, and then we went back to another high. So we've got to watch for a place to see where the support is going to come in. But the importance of this bottom that we have coming in this week is going to be very, very interesting, because we have a situation where we could still rally into new high ground. I'm not sure it's going to do that. And the only reason I say that is the fact that the VIX index has been, this people are just not afraid. They're just not afraid of anything happening. Let's put this VIX index up so we can take a look at it here. But it really, it's not showing any signs of any fear at all. I mean, Basil mentioned it on his show, and we're seeing the same thing now. We haven't even taken out, yesterday's highs. I mean, that's not a good sign. And we've made a bottom down here with this big ABCD pattern that we had down around that 12 and change, but we've never went anywhere. Highest we got is about 16, and that's in fact, we didn't even make 16. We made 15 and change, 1576 to be exact. So there's absolutely no fear in the market. That doesn't mean that it can't show up. It just means that there's not any right there. Frankly, what what I see from what the action was Friday and everything, the action that we had in the bonds has to be a tip-off. We had a 4-point drop in the bonds, which is a very, very strong move. It's an outlier event. You don't see that very often, maybe once a year, sometimes twice a year. And it's usually indicative of, prices going in that direction. And bonds have been in a bear market now for, well over a year and a half. We've had some good rallies along the way, but the rates have been, going higher in the real market. Now, the Federal Reserve, they are continuing keeping rates low, but that is only available to the bank. So I suggest everyone go out and buy themselves a nice bank so that they don't have to worry about this and just issue credit cards to their content, because that seems to be where the players like to look at where things are going. But that VIX index is a little troubling from the bearish side of this, so that's it. Now, on a technical point of view, if the S&P futures, I mentioned that if we got below that 2080 last week, which we did, we went down to 2062. If we get back to that 2080 level, I believe that bearishness that I've been talking about might be wrong. But if we have a really down week this week, in other words, just if we go 50 points lower in the Dow than where we were Friday, or below 2050 in the S&P 500, I really think we're heading down to a big time. And the only way this is really probably going to play out, folks, is some type of an outlier event. It'll probably be blamed on high-frequency trading or whatever it happens to be. There's going to be a scapegoat in there somewhere, because when the public gets hurt, they're always looking for someone to blame, and they'll find someone. And, whether it's going to be high-frequency trading or a bank failure or the Federal Reserve raising rates or quantitative easing being pulled back, there'll be a scapegoat in here somewhere. All the factors are there. We've got margin debt, all-time records, bullishness, all-time records. I mean, it's just all the things that are there. And we'll see. Global warming is going to be one tough one to blame it on. One of our dinners asked, maybe global warming. Well, you have to tell the people up in Niagara Falls, New York about that, because it's only the second time in history that the Niagara Falls actually froze over. So I actually watched some crazy guy climbing it, an ice climber climbing Niagara Falls when it was going over. I think that's got to be about the third or fourth worst sport, but the one that really surprises me are these people that do free rock climbing, where they don't have any safety things, and they climb these straight up things. They have these commercials on TV about it, and I would rather be short the S&P going straight up than be in that position. Why anybody would actually want to do that is really an amazement to me. So I don't know. I shouldn't be amazed, because I knew of a gold medalist from 1960 Olympics that was a mountain climber, and they went down to Chile, and they lost 2 out of 32 people, and they thought it was a successful trip, whatever kind of sport that is. Okay, we got to take a little break here. We got the Dow up really strong. Gold is trying to hold its own here. We'll be right back after these few words.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to talk a little bit more about the stock market as regards to Apple. I've posted into Tiger TV the same chart that I did with the New York Stock Exchange Index going back over the last 9 months. And as you can see with this chart that we have here on the NASDAQ, that we are up to around 10% from where we were last July. Whereas with the New York Stock Exchange Index, we're actually below that level. And then you can see the divergence, just picture it in your mind, that has been huge. Now, with this pattern that we're completing last week, was a 3-drive pattern. We had drive 1 back in September, drive 2 in late December, late November, right around Thanksgiving, and then we had one early last week. And if you'll notice that those drives, each one of them took about 31 days to complete. And we had 3 different sets of numbers coming in here on this last one that we had on the NASDAQ. And, you know, I'm sure that'll be the last one, you know, to give up the ghost when and if it finally. It's not a question of if, it's a question of when, unless they repeal Isaac Newton's, you know, second law of motion, that what goes up must come down. But this is what we're following here. in the NASDAQ and showing you that there is a tremendous divergence between what happened with the rest of the stocks and what's going on in the NASDAQ. You ask yourself the question, have we had this happen before? And the answer to that question is, of course, a resounding yes. We had this during the dot-com bubble of 2000. This is different than the dot-com bubble of 2000 because we're not seeing craziness like we had in other times. And we've had a little bit of craziness. You know, IPOs will jump 20, 30%, but they don't jump 300% or 500%, or they jump 200% on a potential chance of having sales. Not just a question of earnings, but having a sale, which we didn't have some of those in the dot-com bubble, where we had stocks that went up to 300 that eventually, you know, went bankrupt. Those of you who were around 15 years ago can remember that, but that was a once-in-a-generation event. I will never see that in my lifetime again, I don't believe, but I could be wrong on that, but we'll just have to wait and see, you know, what's going to happen. But there is a huge divergence going on here now in the overall market, and it has been going on for 9 months. It's just been and if you stop and think what's happened with quantitative easing, and if you stop and think what's happened with the buybacks that have occurred, there's been over $100 billion worth of buybacks where companies buy back their stock. And why won't they? Because these executives get paid, you know, when the price of the stocks go up, those are their bonuses. So the easiest way to do that is take corporate cash and buy the stock, meaning less stock outstanding in the way it goes to the upside. So we'll have to wait and see. That's the key that we're going to be watching. Again, I wanted to remind us that, you know, we do have this event coming on March 19th where Apple's going to be added to the Dow and Visa will split. And so that'll be probably a real wild time to think that is going to be what's going along. So we'll have to wait and see. The question that someone has posed to us in the Tiger Den is whether there's going to be some craziness like we had in 99 and 2000, and that certainly could be possible, but frankly it was so crazy then that I believe that was a once-in-a-generation event that we won't see. I won't see it. You young folks will, but I don't think I'll ever see that in my opinion. It was just too crazy. I mean, it really was. I mean, they had people, well, we still have these people coming on CNBC that can't be more than 17 or 18 years old giving folks advice. And I remember what Art Cashin said. He's the dean of the old floor traders there at the New York Stock Exchange, who's there on CNBC every day. And he said, be careful of taking any advice from someone who's not old enough to shave, and that includes the girls. I'll never forget that quote because I laughed for 2 days about that. So it was really funny. So you have to remember that you got to have a little bit of experience to go through some of these markets to see if they, in fact, have any same characteristics. I frankly don't see a lot of the same characteristics like we had during 99 and 2000, but there are a few, but just not very much. The divergence is what's troubling. I mean, you got to ask yourself, why aren't more New York Stock Exchange stocks participating? It basically comes down to about 531 stocks that are doing all of this movement. So, who knows what that is. We're going to have Todd Gordon on at the break. He's going to be talking to us about the gold market and also the S&P 500 and also the bond market. So we'll have some ideas of what he's looking at. And he does a lot of really good work with Elliott Wave, which I've tried, but I just don't quite understand. But he happens to be quite good at it, and that's one of the reasons why I'd like to have him on. So we're going to have him on at the break. So I have any questions ready that you might have, and we'll be happy to answer those for him. Next week, I'm hoping to have my...
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our friend Todd Gordon on the line. Todd, are you there? I don't hear Todd. I hear the bing. Maybe the... Todd, are you there? Oh, maybe we have technical difficulties. This would not surprise me because I have more computer problems than a... Oh, I don't even want to think of what it's like. Well, I guess I'll wait until Todd comes back on, and we'll see what's causing the product. We did have him on the line at one time, but he was going to talk to us about the gold market, and we were going to start out with the weekly charts, and we're all familiar with that a little bit. But we'll just go take a look at this weekly chart that he's posted here for us, and then we'll go through. Todd, are you there?
I'm here, Larry. Can you hear me?
Hey, yeah, we got you on. Now, what I've done, Todd, is I'm going to ask you to, give yourself a little introduction. Try to keep it under 35 minutes because that's all we have left on the show. And then we're going to go into some of the charts, the gold and the bonds and the S&P chart. So why don't you tell the folks a little bit about yourself? I met Todd, I think when you started in this business about 15 years ago. And go ahead, just tell them about yourself, my friend.
Absolutely. That's funny. How's the audio? Is there any issues?
Everything's great. Yeah, it's perfect.
Okay, good. That's funny. 35 minutes. I guess, Larry, that's telling everyone that I'm quite the self-promoter. No, I'm kidding. It's really pretty simple. Larry was a major influence on me early on, and I was a young guy knowing I wanted to do this business. I basically tracked Larry down, and he was a major influence on me. So thank you, Larry, for everything you do. You've been a great ambassador to this business and clearing the path for guys coming after you. So that aside, again, I'm Todd Gordon. I run TradingAnalysis.com, and I've, as Larry said, I've been in the business coming up on 15 years. So not quite a solid career yet, but we're getting there. And I'm a trader at home. I run my own money. I run a research business. We focus in the stocks, commodities, currencies, bond markets. I am heavily technical based, and Larry's work certainly influenced me. I went a little bit more down the path of Elliott Wave, and Larry early on warned me in emails, among the other dirty emails he used to send me, which, Larry, you want to get on Larry's personal email list. He sends some funny stuff out. But he warned me early on that, Todd, you want to be careful going down the Elliott Wave path. You're going to make yourself blind by the time you're 40. And he's right. He's right. So I use a lot of the same Fibonacci analysis that Larry does, but I'd like to attach certain Elliott Wave counts to it. So hopefully we can talk about that a little bit, and hopefully Larry gives me a hard time for it. But
no, I won't do that.
Well,
go ahead.
I'm up for it. So
I know you are, but no, you do some really good stuff. So why don't we go ahead and start with the gold futures weekly? I really like this chart myself.
Oh, thanks. This gold weekly, I mean, I know you are currently still bearish, and I watched some of your work, right? You're still looking for lower prices?
I was looking for higher prices up until 10 days ago, and I had to switch to the bearish mode once we broke below 1190, and I'm going to continue that until we get back above 1190 again. So after I look at this chart that you have and then looked at your hourly chart, I can see that it's going to be quite interesting here over these next few days. So go ahead and tell us what you're seeing, Todd. Sure.
So, and I know there's a lot going on in this chart, but I think the most important thing is that red dotted line. And as Larry says, I go on CNBC quite a bit, and I do all a very similar, I do the work here, and then I go on CNBC and I kind of put it in different words. But we talked about this red trend line for quite a ways. And basically, guys, if you go out to the long-term uptrend in gold and go to a log scale, you'll see we are still above trend line support, and that's really the foundation of this chart. So about 1120 area, 1130, depending on the angle of descent, approaching that trend line. On the log scale, we're still above. The wave count, though, actually, there was one more thing even before we get into the wave count. At 1106, that's the old high from, 2010, 2011, so we got old resistance becoming support. So there's a lot of highly visible technical support levels, but then once you get down to the wave count, I think there's enough ammunition that we're going to attack it. So you guys can see down kind of at the bottom of the chart, there's a red circle 5, right? So each of your trend waves within a good Elliott trend, whether it's uptrend or downtrend, 1, 3, and 5. Those are where the real gains are made in the trade. They should break down into 5 smaller waves. So when you look to smaller time frames, those 5 wave moves should confirm that the trend is in fact where it's pointed, which is down. So the move back up to 1300 I'm seeing as a second wave, which sets up that green wave 3 decline. And it's pretty interesting that green wave 3 decline, Larry, should take us through those highly visible technical support levels that we saw, that 1109 high plus that uptrend support in the weekly. So I think, with the fundamentals that we're talking about, and you and I spoke about this with the jobs report on Friday, Fed's going to raise rates, and that's crushing non-yielding assets like gold. So I think we're going to attack this.
That makes good sense. Now, would you like to go down to a little bit shorter time frame, and we'll take a look at it like on a 3-hour chart? Would that be okay?
Sure, absolutely.
Okay,
So,
give me a second. Give me a second to put this in, and the folks can take a look at it because it's a really nice chart. It's actually shows you where we are now and where we could be heading.
yeah, so this is, tell me when you're locked and loaded.
We should be in there now. We should have it in the 3-hour gold chart.
Okay, perfect. So now, Larry, where are you looking for resistance at a very similar level, or where are you right now?
Well, right now I'm watching the 1160 area because it was an exact 786 retracement of the low we made 3.5 weeks ago, and so as long as we can hold above 1160, I think we have a chance. But frankly, the fact that we could not rally off of the last major low was a really negative sign, and all the highs have been lower. I mean, you had to be a fool to try to think gold was going to go up when you have all these lower highs. And actually, when it went below 1210, I believe is where I said, well, this something's really wrong here, because it had a chance to really go and it didn't. So I think we got a shot at your number that you looked at on the weekly, which is 975. That's what I'm looking at.
Okay, and this is interesting, exactly to your point, and this is why I was so excited for this interview, because we look at things, very similarly. Obviously, I hope to have the amount of experience that Larry does when, at that point in my career. But this is where I think Elliott and Fib really go very well, because the 786 retracement, I have that at 1166, right, in the futures?
Yes.
Okay. This wave count, guys, if you look at it, I'm looking at this blue count. You're looking at up around early March. You're looking at parentheses 1, blue 1, up into, and this is right around 1210, 1215. You got your big wave 3 breakdown in blue 3. We were short. I did have this trade on with customers. We had a GLB put spread on. We just covered it into the wave 3 low. And now we're looking in the second blue circle there. You're looking for a wave 4 rally. And with Elliott, there's a lot of different swings on this chart where you could draw some fib, retracements, extensions, expansions, relationships. But what I like to do is take the same two-step approach when doing fib. First thing you want to do is a wave 4 versus 3, which is the first set of retracements. So you're just going to do a retracement of blue 3 up in blue 4, and you see we've just held the 236 retracement, which I think is a little shallow. Just above that's the 38% retracement, which that's at 1192, so that's fine. And then the next wave 4 study I like to do is, Larry, and tell me what you call this, but I like to do just a comparison of distance traveled in wave 2 compared to distance traveled in wave 4. What do you call that?
Well, that's basically you're looking at the harmony or symmetry that's in the market. You could either call it harmony or symmetry.
Okay.
These are the what we call harmonic numbers. That gold's harmonic number has never changed. It's $34 an ounce, and if you want to go back and look at it, just multiply 34 times 2, 34 times 3, and it'll get you really close to some of these swings. But that's really what you're looking at, in my opinion.
Okay, perfect. Yeah, so you're looking at the harmony there between wave 4 and 2. Equality is 1182, which you'll notice is right on top of the 38% retracement. So that's the zone I'm looking at to go after. And just from an Elliott Wave point of view, I'm not, I'm watching gold trade down. We got up to 75. We're trading 67 right now. Trust me, I want to be short, but from an Elliott point of view, that looks to be too simple of a fourth wave. I'm wondering if we're going to have a push up to that green comparison level there around 1182. And at that point, I'd love to be short. But Larry's point about the 786 retracement, notice that the Elliott Wave count only says we're going to have a wave 5 push down to about 1150. That should complete a larger degree first wave, which then would set up a larger degree second wave that I think could then carry us back up to 1200, 1220. So I'm short term, but the wave count's saying we have a completed 5-wave move, which makes me think that 786 retracement up on the higher time frame that you brought up, Larry, you might have like a push below the 786, but then a snap back above. Do you ever notice that in the 786 retracement? That you allow
Yeah, well, you see everything if you've been around long enough, and the thing is that you got to do is you've got to just sort of find a place to, to protect yourself, and that's one of the reasons why these numbers that we look at are so important. Because once they break, 127, it'll usually go to 1.618, and if we break 618, it'll usually go to 786. That gives you the risk control that you need. But you make a good case, for what gold should do. It makes a very, very logical case, and you can put it in context with risk reward. That makes it very interesting.
Yeah.
Hey, Todd, how about because we have limited time, we've only got about another 10 minutes, and I want to cover this all the way to the end. Let's take a look at the S&P. You had a chart on the S&P cash that I wanted to share with the folks. It's the daily cash market, and we had this big sell-off on Friday, and I'm interested in how you read this and what you're looking at.
Yeah, this is a tough one, and my clients know that there's times with the Elliott wave count where you just got to say, I don't know what's going on, and I don't have a high degree of confidence what the count is outside of the last 2 months. But what I do have a high degree of confidence in is that red B wave. And that B wave is a triangle. Almost any way you look at it, it's a triangle. And what's interesting in the Elliott wave world, a triangle always precedes the final move.
Mm-hmm.
So I have a high degree of respect for this uptrend. I really hate to use Elliott for evil, which is constantly looking for 5-wave moves to reverse the trend. I always try to stick with the trend, but everything I'm seeing says this is a triangle, which means this next rally, which we've seen, could be a setup for a significant reversal. And I'm not saying we crash, but we should get down to that green A wave, which is around 1800. So I'm just looking at the fib. And my point is I thought it was an odd place for us to stop up at the high around 21.25. I've got a first zone of resistance around 2080, which we broke through, and now holding it. Got another zone up around 2150. I just think it's an odd place for the market to stop. But if we do stay below 2150 and we start to sell off, I think the market's going to significantly correct because that is a B-wave triangle.
I could believe that. Now, I didn't think that the high in 2000 or in 1929 on September the 3rd was significant either, but I lived to regret that one. So what are you going to do? Hey, listen, we're going to have to take a little break here to pay a few bills for Tom O'Brien, but I want you to stay if you have some time because I'd like for you to cover the bond market because you had a really nice some information on the bonds that I think the folks would like. But before the break, do you have any thoughts on the quantitative easing? I know you live back in the East, and you have your talking heads are always all together talking about this stuff. So, do you have any question or any thoughts on quantitative easing that your colleagues you talk about?
Well, it's got to end. Besides that, we got to return some of this. We got to sell this bond position, return some of the money back to the taxpayers. No, it needs to end. We need to raise rates. I think the price action we saw is fine. I try not to get too caught up on the fundamental side. I like to trade what I see, not what I think. Of course, you got to know what people are talking about, but what matters most is price patterns, and making money with these patterns is really the only thing I care about. But no, I think we need to wind down. The economy's improving. If we can sidestep deflationary forces in Europe, China's cutting rates. The rest of the central banks around the world are keeping monetary policy easy. We just got to see if the stock market can continue to rally with a stronger dollar, which historically speaking it can't. So I'm going to trade what I see, not what I think, and so far it's kept me in the business.
That's good. Well, you've been around for a long time so far. So we're going to have a break here in just a few seconds. So after we get back from the break, I would like to do two things. I want to cover the bonds first, and then also I want you to give the folks some contact information if they would like to know a little bit more about what you do, because you do have some nice educational things that some of the folks could really benefit from.
Oh, thanks so much, Larry.
Yeah, what is your website, Todd?
Sure. It's tradinganalysis.com. So
www.tradinganalysis.com?
Correct. Yep.
Okay, great. Okay, we're going to take a little break here. Then stay with us, and we will be back in about a minute and a half or so, okay?
Sounds great. Thanks, Larry.
Thanks a lot, Todd.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back with our friend Todd Gordon from TradingAnalysis.com, and we have a bond chart posted in the Tiger TV den. So if you'd be so kind enough to go through this bonds and what you're looking at, Todd.
Oh, absolutely. And, because of the tech issues I had on my end in the beginning, I didn't get to say this. Long-time listener, first-time caller. Love the show. Thanks, Larry. Bonds are interesting. The pullback here has been we're at the equality point. Okay, so you see, I have it labeled as 1 or A, 2 or B, 3 or C. And this is where you get some of the criticism of Elliott. And you say, well, you get 8 different Elliott wave analysts in a room, you get 10 different counts. Okay. Well, this is a point where the count is not known yet. Okay. There is a point here, the equality, 155 and 30-year bonds. I have this labeled as a possible wave 3 decline. In a good Elliott trend, the wave 3 should be longer. It should get through the 100%. It should get through the 1272, and it should get down to the 1.618. So what's interesting is we're starting to hold the 100% relationship of the first decline compared to the ongoing. So if this is a new downtrend in bonds, if the Fed's in fact going to raise rates, then we need to get through equality, and we need to get down to the 1.618. There's a setup. I don't have the chart with you, Larry, but I am looking up on my other monitor here in the 3-hour. I'm going to look to be short bonds into this 157 area, and then there's going to be stops pretty tight up around 158.5. And we're going to test to see if you can attack equality and get down to the 1.618, which is much more typical for a third wave.
When you talk about equality, Todd, are you basically talking about this 50% retracement that we had from the high we made on Friday?
No, what I'm saying there is if, let's say, where I have that blue 3 at the very top in the bonds, let's say that's an XA leg right there, then the XA leg would be equal to the, what would the XA be? It'd be equal to the BC level. So the decline from 168 down to 159 in the bonds, and then projected down from 162 to current prices, that's an equal leg decline.
Okay, there, I understand that, sure.
Yeah. So if this is in fact a new downtrend in the bond market, we have to get through equality. We need to get down to the 1.618 relationship and make that longer.
Well, it seems strange that our bonds are so weak and rates are going higher when the rest of the world are looking at negative interest rates, and 40% of the major countries. It's just really quite. I've never seen anything like it, and I've been around for a long time, so I guess this quantitative easing makes it different.
And I mean, but here's the thing: I mean, we're not, they're not winding down the size of the balance sheet. They don't have any plans to exit. They're probably going to let most of them expire and just go into the maturity around the duration. You look at a 30-year bond chart. I mean, we've been uptrending in bond markets for 30 years. We've got to be a little careful trying to call the top of these markets. I mean, I'm smart enough to know I'm not smart enough to pick the top of a 30-year rally. So every time I see these little pullbacks, you get an A equals C pullback, a quality pullback, I'm very cautious. I'm going to take another shot at short bonds, which is a very similar trade to gold, but I have a lot of respect for this uptrend.
Well, you certainly have to. I can certainly remember when it started. I was at Drexel at the time, and junk bonds were, going crazy. And I said, boy, this thing's got to stop somewhere, because we had inflation at 16%. I'd hate to think of, where gold would be if we had going back to where we used to trade off the news when we had money supply and stuff like that. But money supply doesn't count anymore. So it's what they tell you and not what's happening. So you've got to pay close attention to it. Todd, if you had to place put you on the spot, we got to take a break. You really got lucky. I was going to ask you to give us a trade. Not a problem. Hey, listen, thanks for joining us,
I get it. I get to think about it.
Okay, you bet. Todd Gordon of Trading Analysis, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.